Hi, welcome back to Let's Talk Forex with Alison and Chris. This week, we've got a really cool episode for you. We've got Aaron Hill, who's the head of the research team at FP Markets, joining us. He's recently won the award for excellence in technical analysis at the Dubai Forex Expo in October, and it should be a fantastic episode. As always, if you've got any questions, get in touch with us at podcast@fxscouts.com, or you can reach us on any of our socials. Enjoy the episode. Hey, Alison.
Hey, Chris. How's it going?
Yeah, not bad. Not bad. It's finally getting a bit chilly in Portugal.
I heard so, but not very chilly, hey?
Well, 18 degrees, pretty cold. Considering I was paddling around in the ocean a couple of weeks ago, I can't really fathom. But yeah, so December, I can't complain too much. How's it going down on your end?
No, getting very hot here, I must say. Absolutely beautiful. I don't think we've had weather like this in many years.
That's good.
Yeah, but I'm very excited about our lineup today. As you said, we're speaking to Aaron Hill, the head of the AP Markets research team. And with that, hi, Aaron.
Hi, thank you very much for having me.
It's fantastic to have you on.
It really is.
So, Aaron, tell us a bit about yourself. I mean, we've introduced you as the head of research at FP Markets, but your career didn't start in Forex trading or anything like it. You started your career, I was looking back at your CV, in English and creative writing, and then English as a second language. So how did you make that transition from English to Forex trading and finance?
So it was really more luck than anything else. Look, I never grew up wanting to be in finance or trading for that matter. But I was also interested in how people were making money online, especially as I entered the workforce. And I always wanted to be in control of my finances. Look, I never liked the idea of debt, unless it was beneficial in that it was generating a return from it, if that makes sense. Yeah, so look, I really fell into trading while I was teaching abroad, and it really started from when one of my colleagues was looking at the Aussie stock market on his laptop, and it just so happened that I saw the chart as I walked past. We were friends and still are, actually. So I asked him what he was doing, and he briefly explained to me that he was investing in Aussie stocks, and started delving into things like entries, exits, and gaps. And as you can imagine, that went completely over my head. But it certainly piqued my interest. And from there, he lent me a book, and I'll never forget this book. He lent me a book titled Trend Trading by Daryl Guppy, an Australian chap. And look, following this, I was well and truly hooked. No word of a lie, I bugged him daily while I was working with him, and about how he was making decisions, what he was looking at. And it really actually took over my life at that point. But luckily, I was only 23 or 24, I think, at the time. So, yeah, I had time to devote to this.
Sounds like he was already quite an experienced trader then, this guy.
He was a very experienced trader, yeah. And he was essentially trading part-time, but on a swing trading basis, so it's medium term.
Yeah.
But he was a teacher as well, because he liked that the safety of a paycheck, as well as being able to trade on the side. He was very experienced, in fact, very experienced. I was very lucky to meet him. It was just, as I said, it was more luck than anything else.
I was going to say, very lucky that you came across someone who not only knew everything they were doing, but also seems to have their head screwed on right, who had the regular paycheck coming in and understood that trading was a way to supplement their income.
Definitely, yeah.
And how did your career then start? So what were your steps, if you want to put it that way?
So my career, it may sound strange, but it all really started from that book. That first book changed everything for me. I never opened a platform. I never even looked at any charts, but I knew from finishing that book that the investing and trading was something I needed to really explore. Look, even though I'm primarily an FX trader now, FX was not even on the radar at that point. Okay. It was more stocks, because I was following what my friend was following as well, which was Aussie stocks. Yeah. And he was largely trading technically. So I kind of merged into that domain from there. And how I learned, really, was guided by my mentor, who I met much later on, who was an FX trader, and that's how I merged into FX.
What FX was it? What pairs were you trading?
It was mainly major pairs, the 7 majors really, euro dollar, pound dollar. It was nothing specific, but it was mainly the majors because primarily they were the most, still are the most liquid and not as volatile as the exotics and the minors. So I just stuck to the majors, but it was just a new domain for me. So I merged into FX, and it was quite literally hours and hours of chart studies. And I would literally break down every technical indicator to see how they worked and the signals it gave. I would look into psychological elements because that's such a huge thing of trading. And I would look into risk management. It's a huge area. And once you start unwrapping trading and investing, it's almost like it's never ending. Well, it is never ending. It's never ending learning curve.
Absolutely. Yeah. Especially with the markets changing. It's like you can never get on top of it. Yeah.
Yeah, exactly that. You think you're on top of it, and then all of a sudden, you feel like you're back to square one. There was a lot of banging my head against the wall, especially in my earlier days. How to understand this, and why does my mentor, for example, make it look so easy to generate consistent income?
Yep.
Yet I'm sitting there struggling, following the exact same method as he was, but I can't make it work. How does that even make sense? But it all come down to mindset, really, because he was primarily, as I said, a technical trader.
And was this all this time you were still teaching English, or had you moved on at that point?
Yes, I was, but that was the easy part because I was teaching English plus learning as well. But that was the easy part. It was when I actually transitioned from teaching to IC markets as well as an analyst, because I was doing both at the same time because I wasn't sure how reliable the analytical side of trading would be as a job. So I had to be careful. I couldn't just jump straight into that. So it really became quite time consuming for my life at that point when I was doing both jobs at once.
Yeah.
No, it's something we talk about a lot is it's a really tricky period for beginner traders when they're in that limbo state where they need the day job because they're not sure enough of their trading skills, but that they still, they really want to transition into trading. Coming through that period is always very tough.
Yeah, and there's no right answer. There's really no, as far as I understand, there's no right answer. I think for me personally, if you can demonstrate you have consistency on a demo and a small live account, and then if you're making money whilst having a full-time job equivalent to your full-time job, then you could potentially make the transition. But for me, it's always been, I really like the idea of that paycheck. I really like the idea that just takes all the pressure away from trading for me.
And you said you found it difficult and there's no easy way around it. How did you get through it? Was it you just working all hours?
I did try trading full-time at first. Sorry, is that what you meant? If I'm trading?
Yeah.
So I did try that, but it was never for me really, because I'm one of these people that I always need to be doing something. And with trading, that's a very, very dangerous thing to have, because if you always want to feel like you're doing something, you can cause more damage than you want. So for me, for my personality, I always needed another role. But my mentor was a full-time trader. He had nothing else. And I asked him, I can remember his response when I asked him how he entertained himself while he was trading, because you're literally sitting there waiting for trades to set up. He would learn guitar, he would learn the piano, and he would learn. So he would do, and it just wasn't for me. I mean, I don't know. It's just a different. I can't really give a definitive answer.
Yes, I totally get that.
It's just, it depends on the person, really. And for me, I need to be doing something. I've always been, all right, you get this job done, you get X amount, you get this job done, or you work this amount of hours, you get this, and you put this amount of effort in. I don't know. Just for me, it made much more sense. And it still makes sense for me to have a paycheck and then invest in the markets. It's just a very stress-free way of investing. I really do admire those traders that can sit there and trade full-time and that's it.
But it sounds like you really understand your own psychology, Aaron. And I think that's an important distinction, because I think a lot of traders see people who can trade full time and can sit at their charts all day and they think that's what they want to do. But as you say, when they get into that, they start over trading and just, start blowing their accounts left, right, and center because they can't sit there and do nothing, or sit and wait for setups to happen.
Of course, it is quite. If we're honest, trading is quite boring. You're sitting there waiting. I mean, you organize your charts. If you're technically trading, you organize your charts. You wait for that setup to come about, and then you trade. But it is quite a boring. Yes, the allure of trading is quite something. But when you actually get down to it, and you do participate in the markets, and it really is a different ballgame entirely. Adding to that the stress of actually needing to make money if you have rent to pay, if you have a mortgage to pay. It's a different ballgame entirely. It's not just analyzing the charts and picking this resistance or that support, or is the Fed coming out? And it really isn't just about that. So this is really why for anyone that asks me, I always say, always have a backup in terms of some money that you've saved up, or have a paycheck, have a job that you can work around and trade part-time.
I think that's very sane advice.
It is fantastic advice. And what was it about Forex in particular that attracted you? I mean, you said you started off with trading stocks, and then was it just that your mentor was trading Forex, or did you?
Yes, exactly that. Yeah. I mean, I never even considered, FX wasn't even on my radar at that point. It was all just about stocks. As I said, I was following my friend, so I just transitioned. My mentor I met on a forum. I know it sounds a bit odd, but all these great people I've met that's really helped me in my life, I've met on forums and things like that. And he was living in the same city as me. So we just met up, had a chat, and it just become a regular thing. And his payment for him helping me was beers. So it's brilliant. It worked out very, very well. So I bought him a lot of beers, but I would just bring my laptop to the pub and we would talk, and he would show me what he was doing. He was insanely dedicated to it. He would bring me like folders and folders of printed out charts where he would mark where he's traded.
Wow.
It was just another level. And the odd thing, not odd thing, but I went into trading with a know-it-all approach. I thought all I needed was analysis. All I needed was that. And it just isn't the case. He would say to me, "Where's your journal? My trading journal?" I didn't do that because, obviously I don't need that, do I? But I did. Have you read this book about trading psychology? No, I was more focused on the charts and analyzing, because that's where I thought the money was made. But it's really not. For me, psychology is a huge thing, and this is one of the aspects that I always recommend now traders learn first and foremost before anything else. Understand that this is a different ballgame entirely to a 9-to-5 job.
Yeah.
Understand that you are going to have losers. Understand that you are going to be wrong. I mean, as humans, right? We don't like two things. We don't like to be wrong, and we don't like to lose money. Most of us, the majority of us, I'm saying. And when you're confronted with consecutive losses and consecutive times being wrong, this is a huge, huge deal for a lot of traders, no matter how good your analysis is.
No, it's something we talk about a lot on this podcast, is the psychology, understanding your psychology, making sure you're in a good psychological place before you even start trading. Taking breaks when it goes against you, as you're just talking about there, consecutive losses, finding a way to reset your own mindset.
How easy is that though, Chris, to take a break when you're locked in, right?
Well, absolutely.
It's easier said than done.
No,
It's
about, and then of course with that comes a discipline, managing, which is, it's difficult. I mean, Alison and I both meditate, and find that helps, but, I know other people just take a break and go eat something, or go for a walk, whatever it takes really for you. Yeah, no, the psychological side of this is, cannot be underestimated.
And it's often overlooked, isn't it, Chris?
Yeah, hugely.
The psychological side,
hugely overlooked. And especially for beginners who are just starting out, and they're, they see, they think, the dollar signs, and as you say, or they get a grasp of technical analysis and they think that's it.
That's it. It's truly not.
And they end up blowing their accounts.
Exactly. Yeah.
Just moving on a bit, you've taken your CMT, your Chartered Market Technician levels 1, 2, and 3, and the CFTE, and that happened, I assume, more recently. Is that why you were at IC Markets?
I did the CMT level 1 at IC Markets, but then as I transitioned to FP Markets, I finished level 2 and 3 at FP.
Okay.
And for a start, why did you do these? I think I know the answer, but I'll let you answer it. And would you recommend that other traders take these qualifications? Did it make you a better trader?
Why? I was actually recommended by one of the managers at IC Markets, a good guy, a really good guy. And he recommended that I take he highlighted the CMT for me. Mm-hmm. And I looked into it and I thought, yeah, why not? That looks really good. So that's why I jumped into level 1. But I would say I vastly underestimated what it entailed. And this really leads on to whether I would recommend these courses to other traders. And look, while I would recommend these courses, I would highlight to those that are thinking of enrolling that they are quite difficult. They're not easy. It's not simply applying support and resistance lines or trend lines. There is much more to technical analysis that meets the eye, as I found out very, very quickly on the course. This is another question I often get, is whether these courses are necessary to become a trader. I don't think they are necessarily needed. Some of the best traders I know have no formal qualifications in finance or anything of that nature and are consistently profitable. But look, if you're interested in expanding your knowledge of technical analysis, then the CMT is certainly one I would recommend. But again, I have to emphasize that these courses are quite time consuming and they are intense and you can fail them. And they're quite expensive as well. Just to add as well, because you mentioned the CFTE, once you complete CMT levels 1 and 2, you can also automatically get the CFTE designation.
Okay, that's good to know
as well. Yeah, so this is why you see with me as well on LinkedIn, you see CMT and then
CFT,
comma and then CFTE. It's not that I've taken the CFT course as well. It just
separately.
Yeah, it just automatically allows you to get that designation as well.
But on that note, in 2022, you went back to university and you got your BA in economics. What made you do that? Was that before or after the CMT, by the way?
That's after the CMT. I'm actually still enrolled on the degree right now.
Okay.
Yeah.
And what made you do that?
Well, look, I am a big fan of technical analysis, and look, I have made money with technical analysis in the past. And I also know traders who predominantly, as I said, my mentor predominantly relies on technical analysis and generates a consistent income. It can be done. But for me, I just personally felt that I was missing something. It's as simple as that. So after speaking with a number of macro traders, they all said that you didn't need to go back to uni to understand this, but I really wanted to get a thorough understanding. So I just decided to go back to uni on a part-time basis and learn the ins and outs of economics. But look, as I said, as they said as well, and now I understand, in truth, you don't really need to study for an economics degree to trade from a macro standpoint. As you know, I largely focus on FX. There are a number of two great books I can recommend for anyone that's really, really interested in boosting their understanding with the macro side of things, because this really changed things for me. These two books, because there's a lot of books on macro trading out there, but it was these two that really helped me. And yeah, they're both written by Brett Donnelly. It's The Art of Currency Trading and Alpha Traders. They are by far the best books I have ever read, and they're well written, and they really put me on the right path to understanding, how to approach the markets from a macro standpoint, and then blend in the technical side, because I'm quite experienced with technicals, but I'm not as experienced as I'd like to be with the macro side of things. But these books really do, as I said, they really do a good job of showing you how to trade macro from a professional trader's standpoint.
Oh, fantastic. We'll put links to those books.
Brilliant. Thank you.
In the notes. Yeah. Thank you for that.
Yeah, that kind of makes sense. I mean, we've been talking, some of our guests, we've had a lady called Caroline Rundell on here, who's now a trading coach at Trading Angel. And she started in technical and kept on. Her story was that she was winning the majority of the time. She was making good profits. But then every now and then the macro events would catch her out and she'd make huge losses. And she really wanted to cut that out of her trading. And so she actually went and found a tutor to tutor in macro. And now she does the same. And I think what hearing what you're saying is that you really need both sides of the picture in order to feel comfortable in your trading. You need both ends, both the technical and the macro understanding.
Just a lot of people say, obviously the technicals help you just with the entries and exits and defining that risk, but the macros help you with the big picture and knowing which direction.
Yes, you've hit the nail on the head there, Alison. Yeah, exactly that. So
when you started work as an analyst at IC Markets, and then you moved on to FP Markets a few years ago, what made you decide you wanted to work in the trading industry rather than just continue on as teaching English?
It was look, given my it was a passion at the time for trading, and I was obviously interested in English and writing. It really was the perfect fit for me to move into an analytical role. Believe it or not, I was approached by someone I'm not sure if I've mentioned this already, but I was approached by someone on a forum that I regularly posted on regarding trading. And he asked me if I was interested in writing for IC. This is how I got the job.
Oh no, you haven't mentioned this.
Yeah, it was
Okay.
nothing. There was nothing formal like that. And at first, I ignored him because I just what was going on here? This doesn't look right. So I just ignored him. Then he sent me another message, and I agreed to put forward some analysis to see what they thought. And again, I didn't think much of it, and they liked it. And then they offered me a part-time role, so I could work as a teacher and work as analyst. So it's perfect. And then I got to know the people, some of the managers of the IC markets, and they said, "Would you consider coming on full time?" And I said, "Yeah, why not?" And that was it. And as I said, it was just a no-brainer for me at that point. I love the markets, and I could still write, so it really was a no-brainer for me at that point. But I was trading while I was teaching, so I had to put trading on the back burner for that point, because I really wanted to move into the markets full time. As to why I decided to work in the trading industry, really over becoming that full-time trader, as I've said already, guys, really trading is far, far easier when you have an income. And are not fully reliant on that income. So a regular paycheck is very, very important for me, especially given as you get older and you have more commitments. This is very important.
No, 100%. We understand you entirely.
We recently had Patrick Reed on our podcast, and he actually, interestingly, jumped straight into institutional trading. Is this something that you've ever considered? Probably not, based on what you were saying earlier.
If I knew what I do now, I would have left school, gone to university, and probably studied more and studied finance, and potentially headed into the institutional environment. And like they say, right, hindsight is 20/20. If I'd have known what I knew now, yeah, I probably would have done. But on the other hand, the world, we live in such a connected world now. So I have access to bank reports. I have access to all of the research strategists. I also have access to Refinitiv, the LSG platform. So the access I have is just insane, the amount of data I can get. So I'm quite happy at this point that I wouldn't want to go and work in the institutional trading environment now, but I would have done probably as a youngster, yeah.
Okay.
Yeah.
Good answer.
It does seem like a lot of people start when they're younger. It does seem like it's that kind of business. And you recently won, as I mentioned at the top of this program, award for excellence in technical analysis. Congratulations, by the way.
Thank you.
At the Dubai Forex Expo. It's obviously very good, and I've seen some of your stuff, and you are fantastic at explaining the details of technical analysis to a wider audience. What is it about technical analysis that you find so fascinating? I mean, we've talked about how you saw your friend over his shoulder, you saw his laptop, but there must have been something that hooked you. Is there anything in particular about technical analysis that you find so fascinating?
So it all started with my friend at first. I didn't even know what technical analysis was. I didn't even know, what he was doing. He was saying all these things, and that's what piqued my interest. And because he was trading technically, I just followed his lead. But it was really when I met my mentor, and he was the one that really opened my eyes to technical analysis, and that I could actually make money from that. And once you dive into it more and more, you do see how depth it really can go. Technical analysis is not just about support and resistance and things like that. And look, the macro picture was never, ever even on my radar at that point.
Right.
And look, if you can believe this, my mentor, this is something I'll never forget. I was sitting down with him and I was talking, and I was so frustrated. I mean, I was trading at that time. I was trading around a £10,000 account. It's quite big for such a young guy. I was trading, and I was up. I was making money, which was, I felt fantastic. And you go into there, you feel confident, but I was doing so many things wrong. It was all luck. So I would go in there, and he would say this thing to me. He would say this thing. He said it once or twice, and it really stuck with me. And he would say, "Good trading is akin to making a good cup of tea." Can you believe that? He's British, of course, but
Yeah.
You can imagine how frustrating that was at that point. I was trading. I was spending hours and hours and hours of studying, and it was very, very far from being compared to making a good cup of tea. Very far from it, in fact.
I'm sure.
And just to be clear, my mentor was an incredibly large trader with a sizable account, and he was trading purely on technicals. He did have a blog once, but he's since taken that down, which is unfortunate. But he was a trader through and through. So he would not write long accounts. He would just put a few lines under the charts, and that was it. But yeah, he was an amazing trader. And look, technical analysis was what my mentor predominantly used, so I followed his approach. And as I said, the more I got into it, the more I understood about it. I found it quite fascinating. But look, you said about there was something you had on the blog that kept getting called out for those risk events, the economic data. So my mentor was very aware of that, and he drummed that into me. If you're trading just from a technical standpoint, you still have to be aware of what's going on the economic calendar, because you have tier one risk events, right? You have that economic data that can really move the market. So for me, if you're trading just technically based and no macro, no fundamental analysis, you need to be, I believe you need to be out of the markets during that time. And you shouldn't be taking trades just before. Yeah, you shouldn't be taking trades just before the events or even just after the events, certainly not during the events. So that's just if you're trading from a technical standpoint. It's very, very different if you're incorporating macro. It's something I'll probably get into a bit later on. But look, in saying all of this, though, and while I am devoting a lot of my time now to the macro side of things, TA, technical analysis, is still very fascinating for me, as it combines a number of things, from visually being able to apply tools to price charts across a wide range of asset classes, to understand it. And this is a really big thing, to understanding the psychology of where and how traders think on the charts and where they enter and generally place protective stop loss orders. In fact, this is one of my favorite things about TA. So looking for areas of potential weakness on a chart. So think of the big figures, for example. There's so many orders around those areas, and there's a lot you can potential areas of weakness around those areas that you can take advantage of. But this kind of thing is not taught in the CMT. This is something you gain with experience, I believe. So you find those areas of potential pain for a lot of traders where they place their stops. If you know where they place their stops, you know where to enter. So you enter where they place their stops, if that makes sense. I'm sorry.
Yes.
Stop
No,
hunting.
of course it does.
Yeah, essentially that. Yeah, you're looking for the weak hands. That's all it is.
Yeah. Because, I guess it's also then understanding those institutional order blocks. You don't get with pure technical analysis. You don't get into the why behind the institutions and how much sway the institutions have. And I think understanding that those fundamentals are, and I don't know if I'd put that into macro. I mean, it moves the markets, but it's a different type of macro.
Yes, it's just so much. There's just so much to take on board. But as I said, once you get more experience, you can almost tell where traders are entering, where they'll be entering long, where they'll be entering short, and where typically they'll place their stops. The aggressive trader will place their stop at level A, the conservative trader at level B. If we hit level B, we know there's a lot of pain in the market, and that is primarily, if you're just trading from a technical basis, you can make money that way, I believe. Looking for those areas of pain. I know it sounds quite cruel when I say it out loud, but you're looking for areas of pain where traders are the most painful. That's when you should be entering the market.
Yeah, that's very good. So our podcast, focuses on helping beginners get the best start to their trading careers. And, obviously at FPU, you provide a lot of educational materials and a lot of market analysis. What advice do you have for beginners? Aaron, is that something that you obviously work on those materials as well, but what advice do you have for beginners getting started? I mean, would you say they should sort of combine the technicals or at which point do you think it's easier for them to get started and develop their understanding?
All right. So if I was to begin over again, I would do things very, very differently. First and foremost, I would listen. I would advise listening to your mentor. Having the know-it-all approach certainly increased my learning curve and made it a completely frustrating endeavor that I believe a lot of people will throw in the towel if you approach it that way. But look, for me, first and foremost, I would research the psychological component of trading. This is a major part of trading for me, and one that I think can't never remove the emotions as a trader, but you can. I believe you can master it. And this is, unfortunately, as I think I mentioned earlier, this is something that traders often overlook in favor of analysis. I understand why they do this, but look, if you're not mentally capable of handling losing trades, consecutive losing trades, for example, then no matter how much analysis or you do, or how proficient your trading strategy's edges, you are likely to crumble under pressure. Look, as I've already said, we generally don't like two things, right? We don't like losing money, and we certainly don't like being wrong. The majority of us do not like that. And as a trader, you really need to be comfortable with those two things. And if you're not, if you only pay lip service to those, you'll soon be found out, and you'll lose money in your trading. There are some great books on trading psychology. I will recommend one that I consider the Bible for me. It was by the late Mark Douglas, Trading in the Zone. Absolutely fantastic book, well written, and something I was recommended by my mentor to read, and something I read often because it is such a great book, and it really just hones in on what you need to understand. Another component, the next component I would look at would be risk management. It's so key to understand this. And look, we as traders, first and foremost, we're risk managers. You're nothing more than a risk manager, first and foremost, as a trader, I believe. I'd recommend you learning how to use protective stop loss orders, learning to understand correlation, understand your markets trading. Look, there's really no excuse, in my opinion, to be losing money through lack of knowledge. This just shows you haven't put the effort in my opinion. I would also strongly recommend understanding how to calculate position size, or at least be familiar how to use a position sizing calculator. Look, as entering the wrong trading volume could have disastrous effects for your trading. Look, and then I would focus on a mix of macro and technical. I truly believe this is key. Well, it is for me now. So start by studying the basics. Talk to people in the industry. You'll be surprised. There's a lot of helpful people out there that are happy to impart knowledge if you show you're interested. Would I recommend a rule-based approach for trading? I think you do need one, especially as a beginner trader. But this does not look at your approach does not have to be complicated. However, what it will do is it will take time to test the edge, and this is something newer traders do not invest enough energy in. I found. What I mean by a rules-based approach is something like this. So let's use trading out of risk events as an example. This is something I follow all the time. You should have the narrative down and understood for the central banks. So are they hawkish or are they dovish? Have they showed interest in, increasing or lowering rates? And importantly, what economic indicators are most important to the central banks at that time? You need to know these things. For a while now, especially in the US, it's been all on, not the US, across global economies, it's been about inflation.
Yeah.
Well, now it's almost transitioned from a mix of inflation to jobs, right? Yep. The focus is all on that. So given we now know what indicators to focus on, given we know what the central bank is focusing on, we can then begin planning an approach around those events once released. So this is how I approach it. So if inflation continues to increase, for example, this could lead to the central bank talking about now. So this could lead to the Fed holding back on rate cuts, which should, all being equal, be positive for the dollar. And then you can look to implement a tech-based entry around that once that data is released. So look, keep it as simple as you possibly can. Regarding the technical approach, you could look for something as simple as a resistance breach and a retest of support in the example I just spoke about. So if you're trading out a risk event, let the event play out. So 5 minutes into the event, look for that immediate correction or pullback, and then look to trade off that support and to look for a quick scalp. So scalping out of risk events is called, and this is something. This is how I would approach it as a new trader. Again, you will need to put time and effort in, but I believe it's very worth it.
Oh, I think that's great. Excellent. Very good advice, Aaron. If we had to ask you what instruments you'd recommend for beginners, what would you say? We've just spoken about, that you sort of moved from stocks to Forex. Is that something you would recommend that beginners get started on? Just because of how, different key sort of economic events influence these instruments. Would you say Forex is a good place to get started?
For me, I'm quite biased here, because you could say I focus on FX. So if someone were to ask me what would be the instruments to start looking at. I would say the major FX pairs. They have enough volatility to work with, but they're also incredibly liquid, so you can trade in and out with no issues.
Spreads are low.
Yeah, the spreads are very low. Exactly that. It's very cheap to trade. But you could also look at trading equity indices. You could also look at that. But personally, I would stick to a couple. Look, how I would approach this now is I would stick to a couple of key currency pairs. That's it. But when I first started looking at FX, I had about 20 currency pairs at the bottom of my screen.
Whoa.
So way too much, far too much. And I couldn't get my head around it because I thought, all right, I'm technically trading. I don't need to really understand. I just need to look at the charts. And it's not the case. It's certainly not the case for me now. So I would stick to a couple of key currency pairs, focus on the majors. So the euro dollar, pound dollar, and dollar yen and Aussie dollar, something like that. And I would get to know the ins and outs of these currencies very, very well. Get to know the respective central banks, get a narrative of what's going on, and then look to either trade into or out of those risk events. So for me now, given the stage of my career, it's all about trading into and out of those risk events. It's all about the economic data, which is quite the jump from what I was before, just a technically based trader. But thankfully, the technical knowledge that I gathered from my earlier years, I can now use within a component of my trading now. So thankfully, it's not gone to waste.
But I think it's also more reliable in a way. It's more reliable because you know how the macro events affect the markets in general. You know, you've seen patterns. And of course, technical analysis is also pattern based, but it doesn't really have a fundamental behind it. So it's not as reliable, if you know what I mean. I don't know if that makes sense.
Yeah, it does. I think when you combine the two, it's a perfect mix for me. And I think, this is how the professionals trade. So why would you not follow what the professionals do? But saying that, I do know traders that do rely just solely on technical analysis, but they're quite special and they manage to make money. So who am I to say that they're wrong? I'm not.
And how would you say, I mean, we've talked a little bit about risk management here and you've given some really good advice. I mean, a lot of the listeners here from countries outside of Europe and Australia, where specifically leverage can get very high. And this is something that we know that a lot of beginners struggle with. You know, we know that some brokers offer leverage of 1,000 to 1 or higher outside of the UK and Europe and Australia. If you were going to talk to a beginner who had the opportunity to trade with those levels of leverage, what would be your recommendation? Where should they start off with?
This is quite a common question. What sort of leverage should I aim for? Look, for me, leverage is not a bad thing if you understand it and that you can really make it work to your advantage. So if you understand that leverage and margin work together, one cannot work without the other, if that makes sense. So if you find a broker that offers high leverage, all that means is you have lower initial margin. So you have a lower cost to trade, if you will, a lower deposit, if you will, to trade. And lower leverage equals to higher initial margin. So if you go in with a broker with lower leverage, that just means you have a higher initial margin. So for me, leverage is not really the question. Really, for me, anyway, it's all about position sizing and understanding your predefined risk. So for a beginner, I would not be looking at any more than 2% of my account. I know that's the rule of thumb. Even 1% of my account, especially while you're learning, especially on a small account anyway. You could probably go to 2% for that. I think it's all about position size. And once you understand how to correctly size your positions and keep risk to a predefined limit, then leverage is really not that much of a concern. As long as you're disciplined to keep it within your risk boundaries, it really shouldn't matter. To be quite fair with you, I mean, the higher the leverage you have access to, all it means is the less money you would need to put up to execute those trades. And I think this is where the problem stems from with most traders, is the temptation to trade bigger, because you can with higher leverage. If you have 1,000 to 1 leverage, you could trade a huge position on such a small account, and that can only be done with higher leverage. But as long as, I think it all really boils down to discipline. If you're disciplined enough to keep your account within a defined risk limit, then I really don't see the issue. I certainly wouldn't recommend someone go with 1,000 to 1 leverage or 100 to 1 leverage, because for me it makes no difference. As long as you understand position size and your risk, and you keep your risk under that threshold that you've predefined that should be within your trading trading plan, sorry, then I don't really see, there's really no difference.
So it's not about the leverage, really. It's about the discipline.
Exactly that. Yeah, exactly. Yeah. If you don't have the discipline to keep within your predefined risk limits, then you are gonna run your account into the ground, and you only have yourself to blame. Because if you're not putting in the time to understand these things, it's like going on a weekend course and expecting to come out a doctor. It just doesn't work like that. And you're trading against some of the most intelligent people in the world, and it's the largest market in the world with FX. So you should put in the time, and you should understand these components before. Look, analysis is important, but so is understanding your risk. So is understanding the psychological side of things. So it's a unique skill set to become a trader, I believe.
Yep, 100%. Yeah, we just see a lot of beginners crash and burn who they come into trading. I think there's a lot of emerging markets. There's a hazard of a lot of beginner traders trading a bit like gambling, and they see the 1,000-to-1 leverage, and they just wipe out their accounts before they even understand the concepts of risk management or position sizing.
Yeah, awesome.
And that can be very tricky. And and that's, I think, really, what the importance of sitting down and learning about Forex trading is before you jump in, why it's so important.
I agree. Yeah.
Yeah, I just wanted to quickly jump into this, Aaron. Which trading platforms do you recommend, and which trading platforms do you use with your trading?
So with FP markets, I've found that the most preferred one for beginner traders is the MT4, MetaTrader 4. It's the most known. It's old.
Still,
it's the
amazing.
Yeah, it's the oldest and most trusted. I do have access to MT4, but personally, for me, I don't think you can beat TradingView. I mean, as I said, I have access to Refinitiv, and I've seen the Bloomberg charts, but you cannot beat TradingView for charting. I do not use anything else other than TradingView. So while newer traders may be inclined to use MT4 as their charting package, I would always recommend at least exploring TradingView. I mean, you can have multiple charts open with ease. I mean, there's a little bit of a learning curve with TradingView, but once you do understand, it's a very, very nice way to chart. You have truckload of indicators available. I mean, the community is up to like 60 million or something now.
It's massive.
It's insane. Yeah. You can post your ideas and get feedback and stuff like that. And look, if you have a live account with FP and a C Trader account, you can actually gain free access to TradingView as well. So
that's good to know.
Yeah, there's something to explore.
So if you have a C Trader account with FP.
So if you have a live account and you trade through a C Trader account, you can merge the two, and then you can access TradingView for free. Yeah,
that's amazing. Very good.
Yeah, FP is very good with that. With their range of trading platforms.
Yeah,
that
for sure.
A very good range.
Yeah, we've found. I just find it shocking that people are still using MT4 so heavily.
Me too.
What, for charting?
Yeah, I mean for anything.
Oh, yeah.
It's just with MT5 out there, and C Trader is head and shoulders, I think, above MT4 for me.
MT5 is better, isn't it? For
and
sure, than MT4.
Better. Yeah.
I think it's just where they're so. I think it all comes down to the algorithmic side of trading, because from memory, I don't think you can transfer the MQL4 programming into MQL5. I still think that's an issue. I could be wrong. It could have changed by now, but that's the big issue, and I don't think anyone wants to change. I mean, I've been with MT4 for years and years, so I'm always drawn back to MT4 to place orders, but charting, I'll never use MT4 for charting. It would always be TradingView.
Of course.
It's just brilliant.
How do you backtest, Aaron? What is your platform do you use?
So when I first started with FX, I was recommended by my mentor to have a look at Forex Tester. Look, I have no affiliation with them. Forex Tester, they were really good, really, really good. If you're just trading technically, they're fantastic. It really sped up my learning curve. But trading with the macro side of things, it becomes a little bit more difficult. Bank testing for me is really trader dependent. some detest it. Some don't believe in back testing, or a demo account, shall I say, as it has no use due to the lack of psychological element of real money. But I do believe demo trading has a place. I always see it as a license to trade. So if you can successfully trade on a demo account, that would allow you to graduate, if you will, to live trading and begin small. So this is one of the mistakes I also see with a lot of newer traders. They don't put in the time to test their strategy, right? They don't demo trade at all. They just go into a live account, an uncomfortable live account with an uncomfortable amount of money into a live account. And they start far too big and they end up under pressure. And look, I don't need to tell you the rest of what happens next. So, yeah, sorry to diverge a little there. So,
no.
Given the way I trade now, backtesting my strategy, I felt was best. I feel it's always best done through forward testing. I hope that makes sense. So, this could mean using a demo account, but and trading this way until I've proven that I can generate a consistent return. So I don't actually use any software to backtest a method or anything. So I prefer to forward test it and really understand my strategy. And I also prefer to use a small live account because I really want to incorporate that psychological element. Because no matter how much you try to convince yourself that a demo account is real, it's always in your head that it's not real. So if you lose £1,000 or £10,000 or whatever size account you're trading, it will never hurt you as much as it will hurt you if you're trading a real account. So for me, I would start with a very small live account, and then build from there. This is, as I said, one of the biggest mistakes traders make. They don't start small. You're trading with risk here. You're trading with money that you can lose. So you start small. So let's just say £1,000. Start small. You generate a consistent return for 3 months, then you build from that. You add another 1,000, then you build from that. But you always keep your risk in control. But as your account builds, your risk per trade, your amount per trade will grow. And so that's something my mentor just really, again, he just drummed into me. You have to gradually build your familiarity, if you will, with that risk exposure. Without that, you're gonna. I believe you will burn. You'll burn out because it'll just be too much. It'll just be too much. You'll be putting a trade on and you'll see those numbers go up and down, and you'll never trade from an objective standpoint from that without being familiar with that risk exposure, I feel.
Yes, I think that's 100%. You're absolutely correct. It's always something we had Chris Weston on from Pepstone on some time back, and something he said always sticks with me. He said, your first year in CFD trading is just about survival. You just want to you don't look to make a huge amount of money. Keep it small, keep it gradual, make sure you keep your head above water. And as something you just reiterated there, at the end of the day, as traders, we're risk managers here. Your number one priority is to protect your capital.
And that's not what a lot of traders do, unfortunately. And this is why I think we have such a huge burn rate with the traders that are coming in. They think it's easy money. And what I read somewhere, it's the easiest, hardest money you've ever made, or something like that. I can't remember. I can't remember, but it really hit home, and it's right, because anyone can open an account now. Anyone can press that buy or sell button. But to actually trade from a consistent standpoint takes an incredible amount of skill. As I said, a unique skill set. So start small. This is why you see so many experienced traders saying start small. But how many of us actually listen to that? We don't. We start small, you build up gradually. It's like anything. You become familiar with your risk profile, and that makes trading. So that's why my mentor can trade from such a large account size and not feel the pain of a loss, because I saw him take a trade of once where he lost a huge amount. It was a huge amount of money to me, and he didn't even blink an eyelid. And I was in awe. How can you possibly not even feel anything? And I mean, I saw the trade going against him. There was no reaction from it. It was like a robot. But that's years of years. And I must also say that my mentor was actually in the institutional side of things as well. So he does have that background.
Oh, wow.
But he sticks with the technicals. It's what he was comfortable with, or he is comfortable with. And went from there. But I'm just in awe of that kind of person that can do that. But he said it takes years to get up to that level. Once you're up to that level, it becomes easier. And one thing he did say is once you do get up to those higher levels, and it's so true, because once you build your account to 100,000, just say 100,000 to 200,000, you don't risk 2% of your account. You risk 0.5% of your account, because you don't need to make that much money. You're not going to risk 5% of a million account with $1 million. pounding, are you? There's no point. There's no need. But yeah, I guess that's all trader dependent. But the idea is start small, build yourself up gradually from there. It's quite simple, really, when you think about it.
Yep. No, it's fantastic advice. Let's hope people actually follow it. So, yeah, thanks so much for walking us through all this. It's been fantastic, but I just wanted to have a chat with you briefly about the state of the markets as well. So 2024 has been quite volatile. We've had, it started relatively slow for FX, but then things really kicked off for the Bank of Japan rate hike in March. And that led to the unwinding of the yen carry trade. And then we had those few days in August where all hell broke loose. We've also had, as you mentioned previously, the start of the rate cutting cycle as inflation has eased and, the shift to looking at jobs. And then we just had, famously, Trump's victory in the US election, which has, the Trump trade has not only turbocharged the US dollar, but I mean, it's just, it's like a bowling pin. Bowling ball is just smashed through. I mean, maybe this is a silly question based on that, but what do you think is the most significant macro event in 2024 in terms of the long-term consequences for the FX markets?
Where do I begin with that question? For me, it's two things, right? There's the global disinflation story. And the central bank's cutting rate, and of course Trump easily winning the election there, which I was very surprised with because it was quite even going into it, wasn't it? And he just, it's a landslide.
I thought he was going to win, but I thought it would be closer than that.
Yeah, I did too. I'm not political at all, but I was following that because of the markets and things. But yeah, it was a complete landslide of a win. I mean, irrespective of your views of Trump, I mean, you've got to admire how he won. I mean, it was a landslide across the board, wasn't it?
It was the red sweep as well, getting Congress and Senate.
Pretty insane.
Yep.
Look, so for me, the story really is the disinflation story and the obviously Trump winning. It's awesome to follow. I mean, you've got the Fed now. So I follow the US markets quite extensively. So you've got the Fed and now the return of Trump. It's really added some volatility to the markets. As you said, the dollar's been climbing. I mean, Bitcoin is it's insane right now. I wish I invested back then in 2010 or something. I wish. Yep. But I never thought we'd be seeing 100K. I'm looking at the chart right now, actually, the BTC USD chart, and it's just hovering. I can't understand. It's just hovering just below that 100K mark.
It's tried a few times, hasn't it? Maybe it'll actually do it this time.
And I just think there's going to be chaos around that level. If we ever do, I'm sure we will reach that level soon, but there'll be chaos around there. For me, the US is very interesting right now. We got inflation, stubborn, just ahead of that, the Fed's inflation target. You got CPI, PPI, and PCE inflation slightly accelerating.
Yep.
And now this week's jobs numbers, right? So this week's jobs numbers are critical, especially on Friday with the headline BLS report out, and this will be a major thing for the markets. So look, with the US economy resilient, this goes back to what I said earlier. This is how I would trade this. Should job creation report higher than expected numbers and the unemployment rate decline, maybe this could see investors reevaluate the prospect of a rate cut later this month and really lift that dollar higher. With the Trump trade, as you said, his proposed policies for could have inflationary implications, and therefore really see the Fed slow the pace of rate cuts and give more of a boost to the dollar. So I don't really see any need to. I'm just going to check the charts just quickly now. I know the dollar has pulled back, but there was a support area between 105.48 and 105.80 that I was really looking into over the weekend, and it has bounced perfectly from that area. So
it has.
But it's absolutely perfect. It's a perfect technical area of support there. And given all I just don't see any need to be short the dollar right now. And of course, the crypto market as well with Trump. I mean, look at the month of the November's performance for Bitcoin was nearly 40%.
Yes,
crazy.
It was nearly 300%.
Yeah,
that's just I can't even put that into words, really.
There's nothing quite like crypto, is there?
No, it really isn't.
No.
It's nearly 300% in a month. That's in a month. It's not a lifetime. That's a month. Litecoin was up 50%. Ethereum, nearly 50% as well. It's just one man can cause this, and I don't really know what else to say. But yeah, I think the things to watch for closely will be the dollar, cryptos, of course, and gold as well, because gold did take a little bit of a dip, didn't it? It did get knocked back, but it's still holding higher. So these three markets are what I'll be looking closely at as we move into 2025. And the dollar and I think Bitcoin is heading higher. I do believe that.
Yeah.
What do you think the long-term prospects are for I mean, maybe this is
for
this is a difficult question to answer. Yeah.
I think it all depends on Trump, to be quite fair. I mean, can you imagine this? If Trump does follow through on his tariffs as well, the tariffs and his promises. I mean, there was, during his campaigns, he said he wanted to make the US the crypto capital of the planet, and I think Bitcoin's superpower of the world. If he follows through with his promises regarding cryptocurrency, I believe it will be 2025 will be an awesome year for the crypto space. I really do believe. It'll
be interesting to see how the SEC responds to all that.
Did you see he was gonna Trump said he's gonna fire someone from the SEC. I forget his name, Gary something. He was gonna fire him because. So it's going to be I think we should just say it's going to be an interesting year for 2025.
Yes, I think that's probably right.
Yeah, so irrespective of anyone's political views, I think from the market's point of view, it's going to be a very, very interesting point of view. I mean, even his comments now on his social trading platform are moving the markets, and he's not even in the White House yet. So
no,
it's crazy.
He really is.
I'm going to be doing a video a bit later today about this, about the commentary he's given on. What was it first with last week with the tax on the tariff on Canada and Mexico, and he posted, and the market's gapped, and you say he's not even in the White House.
Did you see the one he did over the weekend as well? 100%
God, about the BRICS. Yeah, 100% tariff on BRICS countries. But I think one thing, I think you're right, it's going to be interesting, but I think also really good for Forex traders. It's going to be volatile.
I think incredibly volatile, especially for the dollar and things like that. And it's really just lit a fire under the crypto space, in my opinion. And it's all down to how, in my opinion, it's all down to how he goes forward with his proposed policies. Because they are inflationary if you look into them, and this could really give the dollar a boost. As I said, if the Fed pulls back on those rate cuts, this could really give the dollar a boost, and see the euro dollar. I mean, the euro dollar's on the back foot as we speak. I mean, it is testing a key support at the moment, so it'd be interesting to see how that reacts from a technical standpoint. But yeah, I don't see anything stopping the dollar or Bitcoin at this, cryptos at this point.
Good advice.
It's chalk and cheese from last year, huh?
100%, yeah.
I think it'll be a completely different landscape.
It is a completely different landscape, and it's changed so quickly within a couple of months. I mean, if you look at the Bitcoin chart, it's just mind blowing how. It's just mind blowing, really is, how it's all playing out. I mean, if you look on the weekly time frame of Bitcoin, it was in a descending channel from around 72,000 to from 56,000. It just jumped to the upside, and it's not looked back until we've reached that 100K milestone. Now, I honestly never thought we'd be here that quick. I never thought we'd be at 100K that quick. I just didn't think we'd be here that quick. I mean,
it's almost become a new safe haven.
It really has, hasn't it? Yeah, and like you said, Alison, what the SEC. I mean, Trump's talking about deregulation and things like that, so that could really lift the crypto world again. I don't know. I mean, there's a lot of forecasts out there for 200K, 300K. I mean, I can remember when it was trading around $3,000 and stuff like that.
Yeah.
And I was thinking, should I invest? Should I put some in there? Should I buy a coin? God, I wish I did. It's 100K now. But yeah, it's not. I just didn't think it would be this high this quick. So yeah.
No, I don't think anyone did.
No.
Well, a few people did. The true believers did, but I think most rational market analysts didn't think it would do this. Which is the only thing that, I mean, I've always been a bit of a crypto skeptic, and I'm beginning to be won over. But there is still quite a large part of me that is sitting here waiting for the other shoe to drop.
Yeah, the pop lower. Yeah.
Yeah. But I agree with you. I think that's not going to be 2025.
Yeah, it just all depends on Trump's. I think if he pulls back on those policies regarding crypto, I think we'll see it tank. I believe that. I believe it will be a problem, and you'll see, be a huge sell-off and there'll be a problem. But I don't think he's going to do that.
Doesn't look like it.
No.
Doesn't look like it. Well, look, Aaron, we've kept you for over an hour, so we should probably let you get on with your real job. Thank you so much for coming on. It's been truly magnificent. Real pleasure.
Yeah.
Are you on LinkedIn and Twitter?
I'm on LinkedIn, yes. Yeah.
And X,
not
X,
on Twitter, no. Or X,
okay.
no.
Okay. And you're on YouTube as well on a regular basis as well for FP Markets?
With FP Markets, yeah.
So people can find you there. We'll put links to all of that in the show notes. And we'll also put links to all of your recommended books as well.
Excellent. Thank you very much for that.
Yeah, superb. And we'd like to have you on again in the future.
Oh,
maybe we can talk, see about our predictions for crypto and the dollar, maybe in a few months.
Yeah. Yeah, it's been a good experience. Thank you very much, guys.
Yeah, thank you.
Thank you.
Lovely to meet you.
Yeah, you too.
Cheers then.
Cheers. Bye-bye.
Bye.
Bye.